Good morning.
Hello, good
Welcome.
morning.
Welcome to the last week of April. According to the internet, Ted, we have about 1 week before the entire financial system collapses and everything goes to zero. The dollar is worthless, and I don't know what they expect to happen. Uh, but it seems to be the consensus that that's what's on the table. What are your thoughts?
I say here we are once again. We find ourselves on the edge of collapse again. And all it has served to do is for us to keep chasing, or as a species, we're chasing our tails as we allegedly are careening off the cliff of doom. And I think, ooh, wow, did you see that?
Yeah, you're on the cliff of doom, man.
we,
You're
we
about to
just
fall
careened
off.
off the cliff of doom here in on the ranch, and that was a power. The power just went off and came back on. But thankfully, you want to know what didn't happen, because we are prepared. Is that all of the internet equipment, the Starlink, the backup, the routers, the switches, the wireless bridge between the buildings, all of that stuff, everything is on battery backups, and they worked.
That's amazing, man. You are
Score
you
one.
you got a great setup, man. I could learn from your technical prowess
It's
there.
the
That's
easiest stuff, though. I mean, it took a little time to acquire said equipment because I think I have 7, 8, or 9. I forget now. UPS battery backups, the ones that are like yay big. They're 1,500 watts. It's enough to give you like 45 minutes to like turn everything off, if like it was crisis. But the point is that having a backup is always a good plan, and it didn't disrupt our thing. I think the magic here is that uh, in this world we live in, you never know when the bottom's going to fall out of something, and you might get rug pulled. So we can make it. I can make an analogy on the fly here. Is that every once in a while, when you least expect it, some unforeseen event is going to come along and try to yank the rug out from underneath your feet and throw you off balance. And I think that the mainstream media have learned that this is just part of the business that they're in. So there's that facet. But what I'm trying to get to is that, like we've seen time and time and time and time and time again, where we'll have price will find a direction in an asset like Bitcoin, or in crypto, or in asset classes like stocks, crypto assets, uh, crude oil futures, for example. There's different markets where people are bringing things to the market. They're bringing liquidity to make available on offer to people that need to acquire liquidity. There's people that have liquidity. There's people that need it. Markets are a way to facilitate liquidity and exchange of buying power in many forms. What I'm trying to get to here, though, is that, like, for example, we're looking. If you do you have the Bitcoin price chart handy there, sir? We'll just dive right in for a second, and I'll talk a little bit about what this looks like
Yep, I do. I've
historically.
been watching Render. Render had quite the weekend.
Yes, it did.
Let
Wow,
me pull up.
that's quite a good chart. We'll come back to that. I'll throw some of my armchair analysis, or my like armchair financial analysis on
Well,
top of that chart as well.
let's before we do that, let's hit this macro
Okay,
economic
sure.
calendar and kind of give people an idea of the events happening this week. Just a quick run through of stuff that we should pay attention to. I know we got a big earnings week, so that's something to pay attention to. And a lot of people are expecting earnings to be down, so we can pay attention to that. And then also, what are some of the things I'm just eyeballing? This new home sales, I think, is probably something that's pretty important coming on Tuesday. Uh,
Yeah, so today, the 24th, we have Chicago and Dallas Fed, which is, well, Chicago Fed. The Chicago is the National Activity Index. It's not a super hot thing necessarily, but there are. I think it's safe to say. I mean, I try not to speak too broad of a generalization here, but like things like um, anything that's any data that comes out of a regional Fed operation like the Chicago or Dallas, or from the Fed in DC is stuff that people are paying attention to. If you're in the financial world, or in the or in the business world, I should say, there's a lot of macro levers nowadays that tend to cause problems as we find ourselves in a globalized trade world, globalized finance, and there's a lot of different players that are involved. So what I'm trying to say here is that Chicago Fed, Dallas Fed manufacturing is something that people are keeping. And really, I think the reason you watch things like the Dallas Fed manufacturing index is it's ideally people are trying to understand, if you ask my opinion, is are we going into a recession like we've been scared to thinking into by the mainstream media, meaning or if I'm in business, our consumers, meaning my customers typically, are they being scared into thinking a recession's coming? And if so, what do I need to do to be prepared for that? So that's something that's coming down today. And then tomorrow, the S&P, the Case-Shiller is one that I think like more people pay attention to than anything else. But in tandem with Case-Shiller, the new home sales and this idea of a house price index is something that people do also consider. And I think the reason that housing is a barometer, or like housing performance, new home sales, mortgage originations, like how many new mortgages or how mortgage applications and things like that tend to lead in terms of consumer spending later on after they get into the home. I just moved last year. It's been 1 year now on the ranch here, and you wouldn't believe what we've had to spend over the last 10 months as we started getting settled in. And what I'm trying to say is that people are smart. They figure these things out. There's patterns here. Humans move into new homes. They need things. They go out and they spend into the economy. So housing prices, there's more Fed manufacturing from Richmond this time, Dallas Fed services, and then New York Fed talks about treasury purchases. So there's a lot of Fed activity this week. I think it's no accident, and we'll get into this when we look at look at charts and look at asset prices. There's probably a really good, solid, maybe not exact correlation between how we've seen digital asset prices rise up to a certain level and start to trade or oscillate in this range that we're in, and probably has a lot to do with what the releases that we're seeing. So get further along into the week, Wednesday. Here we are, more housing data. So the mortgage rate, which a lot of people tend to, in my opinion, they over exaggerate the importance of mortgage rates, although they are a big part, or they're a big piece of the pie in the overall, they're a big variable in the overall equation when it comes to housing. But the reality is that people may say, I'm not going to move now because interest rates are too high. But I'm telling you, people are still applying for mortgages. They're still moving. They're still buying houses, because at the end of the day, we here, in order to live the rest of your life, you need a place to live. And a lot of people are sick and tired of renting, and they don't care what the money costs, because off the record, you can refinance in 2 years, 3 years, whatever. And if you're paying attention to rate cycles, we're probably near the peak, plus or minus with regard to how fast and furious the Fed has raised the Fed funds rate. So if things change over the rest of this year and the Fed has to start cutting rates to accommodate all of this insanity, then all of this short-term, relatively speaking, this hubbub about what it costs to acquire a mortgage and what you get for your money, et cetera, all that's going to fade into the ether. And people, because we're a species with amnesia, will forget, and then you'll see a housing boom or a mortgage boom kick off, kind of thing. Not predicting that, but I'm saying that could happen. So people are going to look at the mortgage rates, more things that may indicate really the durable goods, wholesale inventories, that kind of thing is going to be like lumped into that. Are we heading into a recession? Oh my God, what's going on here? I don't necessarily worry or I learned that this whole like gasoline, crude oil things don't really matter so much, because the data doesn't really factor in some of the advances in extraction technology, where the number of oil rigs isn't like the number of new oil rigs doesn't really matter, is because each rig got more productive. They didn't have to add another rig. So that whole metric is kind of skewed. Move on to Thursday. Looks like got some employment data, but it's quarter over quarter, which may not move the needle. But I think pending home sales and Kansas Fed is what we can look forward to on Thursday. And then rounding out the week, it looks like we might be pretty quiet on Friday, except for the fact that we have Chicago PMI. And then the last one on this list for this week is the Michigan consumer sentiment. This Michigan consumer sentiment, I've learned over the years, is something that a lot of people pay attention to. It's just that they have a really, I don't want to call it a great model, but it's probably like the best it can be, considering all of the challenges it takes, or all the challenges that are present when you're trying to actually measure consumer sentiment. Because remember, people say things all the time. Doesn't mean they act on them. But the point I'm trying to get to is that these data sets, at the end of the day, and in summary here, these data sets are what a lot of eyeballs look to try to formulate the narrative as they see it, what's coming down the pipe. And at the end of the day, it all really boils down to how are we going to be positioning. If you're in this game, if you're in the traditional finance world, you're looking at where you need to be positioned. What is the stock market pricing in? What are futures pricing in? What are commodities pricing in? What is crypto pricing in? And what on earth are the central banks doing? And when are they going to either raise or cut, or like how likely are they to raise rates in May, June timeframe? And what does the run up to the next Fed FOMC, which is I think there's a lot of people putting the brakes on now, trying to figure out how to get ready for this next rate announcement, either to increase or cut or pause, I should say. It's probably more likely they'll pause than anything else. Although markets will probably tell a different tale and say that we've got at least a 25 basis point hike coming, even though we've had some calamity. So that's my outlook for the week. And
Good. No, that was fantastic. Yeah, my gut reaction is they raise another 25 basis points, but
I think you're right.
Take that for what it's worth. Okay, we can flip over to the Bitcoin chart. We're in the 27.5. We kind of got down to the low 27,000s. We've come up a little bit, but overall we've rejected pretty strongly off this 30,000K level, and
I think there's a reason for this, and I want to try and get this point out while I have it fresh in my head, or I should say, I'm having a moment of somewhat clarity here.
Yeah,
and
go for
what
it.
I'm trying to communicate is that price earlier in the year was in the 19,000 ish, call it 20. We started in January at 18, 19, something to that effect. And when you're looking out to the end of the first quarter, and you're considering all of the things that remember, every year is the same for the most part. It's Groundhog Day sometimes. Okay, the big players, the banks, the hedge fund traders, all the people that participate in financial markets, like these massive retirement funds, massive pension funds, and all of the people in the apparatus that participate in these things to facilitate the good work of trying to make people's retirements, worth something. They're all looking ahead. And what I'm trying to say is that when you begin the year and you look out into the future, you think, okay, I need to be positioned. Okay, so the positioning into the end of last year was that crypto, for example, the trend was down and people were heavily positioned short, and derivatives, meaning futures, were pricing in moves to the downside. And the way to make money, quite frankly, was to be net short crypto last year, given all of the FUD and all the other things that were causing money to pull out of the space. So what I'm trying to communicate now is that when you look at how far down crypto prices had come, for example, and you look at what stocks are priced at, you look at what the Fed might do, you develop a thesis that basically says, is this asset that I'm interested in investing in or buying, is it undervalued, or is the sentiment terrible? And the sentiment was so terrible in many respects that it turned out to be a good risk reward, meaning it couldn't really come, like, because of all the heavily short positioning there was. The smart money was like, well, look, the risk reward, we have a greater chance that this thing blasts off than if it continues to go lower, because quite frankly, we don't, how can it get any worse? Take that with a grain of salt, because it can always get worse. What I'm trying to say is that price has recovered and climbed out of this trench, we'll call it. And as we've gotten through this first part of the year, if you've been sitting on the sidelines, you've been watching this happen. And I think this is, a statistically significant number of market participants have been sitting here watching this in disbelief while all of these short positions were unwinding. And I think that's been the impulse higher has been mostly led by people unwinding short positions, and then retail buyers piling in to ride that momentum higher. And what we have now is a situation where at this point now, we tested this $30,000 level in Bitcoin, and people look out the next quarter or the next 3 or 4 months, and they say, at this current price, and given the current conditions and what we now know about what the Fed might do, we've got some more crisis on the table. Okay, these are new things we didn't know about at the beginning of the year. Is the risk reward still in our favor? And I'll argue that the reason that the price is settled at 30,000 is that a large enough number of market participants, if you're not already long, or if you are long already, you think, okay, we took a position earlier this year. How much more risks do we want to put on the table? Because we reached this area where the market is now deciding that we're not going much higher than this, and we'll trade sideways, and people can make a decision about if they need to take some off to pay the bills, or if they've been trying to short. And there's lots of different ways to participate in the market, and I won't want to bore you with those details. But the bottom line is that the risk reward, or this overall mindset of looking at the chart and trying to determine positioning, I think we've reached this $30,000 level where there were a lot of people that were short at the beginning of the year, and they decided it was in their best interest to unwind those. And we've gotten back up to this price level where we're waiting now. And what I mean by that is the Fed, there's confluence here. The Fed is near the top of the rate cycle. There's talk of there's this debt ceiling thing that it's probably very likely that it unleashes the next wave of QE, or the next wave of liquidity is the key. And you have things around the world like the PBOC, which is the other central bank that really matters in liquidity terms, and an entity that has the capacity and the wherewithal and really the means to unleash additional money into the system that makes its way around the world, because it does. That's the other variable on the table right now. And this, the last but not least, is as we get closer to this period of time that the media has been peppering us with, we're probably heading into a recession. We're going to have a mild recession, and we're definitely going to have a recession. Brian Moynihan, Bank of America, see a recession on the table. Ken Griffin from Citadel probably talked about some recession stuff. I mean, there's all of these celebrities in the financial world that everyone looks at and says, please tell me what on earth is happening, so I can feel better effectively, because I don't want to have my own thesis and all this other, like, my commentary on market participants out of the way. But what I'm trying to ultimately communicate here is that the downward pressures of last year were alleviated once these bad actors and all this nastiness got flushed out. The pressure was relieved, so we had some upside movement up to this level where it's effectively taking a breather is probably a good way to think about it. And we're now positioning. People are trying to decide, like, what's the next leg? Is it a leg higher or is it a leg lower? And I'll finish up here by saying what I think happens. I think the more likely scenario is, as there's this, like, a lack of clarity concerning where the Fed is going, what the Fed's going to do in the next, 40 days or something like that. There's lack of clarity there. There's people are looking at other economic indicators, in my opinion, trying to understand like how likely is it that we fall into recession this year. The debt ceiling thing is another one. There's no clarity in a large enough capacity. There's not enough clarity across the board in people's minds of what's going to happen. And I think what's going to happen, they're going to make a really big deal out of it because it scares a lot of people. And the Democrats are going to come at it from one angle, and the Republicans are going to come at it from the other. And it's going to come down to the 11th hour, like it always does. It really almost always does this. And they'll ultimately come up with magically, there'll be a solution that funds the government to the extent that it needs to be funded. It's going to involve a crap ton of additional money that gets put into the system. And I think we're waiting for that. And until some of these things get resolved, I think that there's going to be a lot of retail interest and or a lot of hopium. And I know this from personal experience. Like I'm hoping the price goes higher, but I'm putting on my macro hat again. And the last point here is that I really think that Bitcoin trades back down a little bit further, and I'll go on record saying that I think that it's very likely that we come back to about the $25,000 level. But it could be that as we get into this debt ceiling debacle and the media is just pounding people in the forehead with all of this doom and gloom terror scenarios of what happens if we default as a nation, that there's some panic selling, perhaps, probably some aggressive speculative short positions that are also going to put selling pressure on. We could see 24,000. What I'm trying to communicate simply is that from a risk reward standpoint, buying at 30,000 with no clear upside potential doesn't look as good as buying at 24, 25,000, where you can look at the chart at least and make a base. You can come up with a hypothesis is that other heavy duty market participants were able to support the price at this 24,000 pretty substantially, and we had these nice impulses, these legs higher. And if sentiment dumps and price pulls back to the $24,000 range, you could see some pretty big players move in and benefit and try to capitalize on the nastiness. And what we're looking for here on the chart is, especially on the daily or even a weekly time frame, we're looking for price to pull back to like a $24,000 level, and we're looking for RSI to get heavily oversold into the 40, 30, and 20 range on the RSI, and that'll indicate that the risk reward is now in your favor, long potentially, and shorts will be covering because they made their short-term trade plan worked out. And they're going to go back to the drawing board and try to figure out their next move. So that's my analysis of the Bitcoin chart for today.
Yeah, it's interesting because it's like you have to always keep in mind that there's a lot of different ways to look at this. From your analysis is from your background at a fund and understanding how market participants react, which I think is extremely valuable for people in crypto to understand how the other side, I guess, traditional finance looks at this stuff. From our perspective in crypto, right? If you're not an active trader, all this does is help you, get an idea of the next 2 to 3 months. And what you can do, and for what I did, is when we got up to the $30,000 level, and even after we crossed over probably 25, I stopped dollar cost averaging, right? Because I look at this long term, and I love higher prices, but for us to go straight up, if Balaji I think has 50 some days left for Bitcoin to hit 1 million, right? And as we've talked in the past, if it goes up like that for some reason, something's catastrophically wrong, you're already positioned, right? You've been dollar cost averaging, and what you can do here is if we get that back down to 24, 25, what I'll start doing is I'll start dollar cost averaging again into Bitcoin, and that's a long-term thesis. But I just wanted to point out that when you look at all this stuff, it's just, information you can use to kind of, like you said, evaluate and test your hypothesis and see, how the market reacts. So I think it's one of those things that, you just have to remember what your individual strategy is with all this stuff, and then use this information to adjust or make changes or, confirm your thesis, if I could say it. But does that make sense to you?
It does. I appreciate, I like the direction that we're going right this second for a lot of reasons, because despite everything I just said, I'll rewind the tape a little bit. It became necessary for me to start looking at this through the macro lens, at the macro hedge fund that traded currency futures and other derivative instruments that this idea of buy and hold was just not, we didn't do that. And it was only after I joined the fund and started talking about stocks in my weekly reports and the stock market, US stocks, and then crypto, where they were like, okay, we're going to carve out a percentage of our overall trading capital to build an equity portfolio. And that's, you see, the point I'm trying to get to is that even though we have this ability to look at the markets and make these basic assumptions and talk about it through the lens of our perception, or perceptual filters, I should say, this idea of buy and hold is where I'm going. Your personal thesis, which I think the collective thesis here is that we're buying Bitcoin and holding it today for the long term, meaning 5, 8, 10, 12 years from now, even though we're in approaching the middle of 2023, and we've been participating for years. And we initially were like, okay, this is a base layer asset that has all of the right characteristics of something that is provably scarce, and et cetera, et cetera. I'm not trying to sell anybody on why Bitcoin's a great thing. But the point I'm trying to get to is that it's times like these where you can gut check yourself and say, is my underlying thesis still intact? Do I still think that this is a long-term play? Great. If it's so, I'm not really concerned about the price. It was going down. We were dollar cost averaging in. And as it started to go back up, we were dollar cost averaging. And now that we've taken out some of these previous levels from last year that we thought were pretty low to begin with, and we've gotten above those again, and we're at a point on the chart where it's like, wow, okay, maybe we tone it back down a little bit from a capital injection perspective and see what happens. And if we get pullbacks, which are natural and expected and necessary in price, those are opportunities to buy the same thing you cared about, and still all of the basic fundamentals still apply. Nothing's changed about how Bitcoin operates. It's provably scarce. All of those things are still intact. And as a matter of fact, at this point, here we are, almost 100 days into the year. If anything, you should be 100 days worth of information smarter and more, in my opinion, more committed, or more have a deeper understanding of what you own, in this case Bitcoin, and you're looking out into the future and being reminded of things like, yes, if Bitcoin went to 1 million in 50 days, you said? Did I get that right?
It's 50 plus days, yeah.
It's some incredibly small amount of time for price to move that high. I'll say it, just did. The thing to remember and to factor in is that what would have to happen in the world for Bitcoin's price to move that high that quickly?
You'd have to have a U.S. debt default. You'd have to have a ton of bank issues. You'd have to have major players enter the space. You'd have to have a repricing of the dollar, right? And all those things are, if you open YouTube, every expert on YouTube, a quote unquote expert on YouTube, which includes us, by the way, we're just two guys that are trying to share what we know. But everybody's saying it's over, China, Russia, they're all working together. And I when we talk, Ted, it's the same thing. I mean, do they really all of a sudden trust China? All these countries are making deals with China supposedly, and acting like they've come to some kumbaya. Now, I will say, the United States isn't necessarily the favorite kid on the block anymore, right? Like we've done our fair share of stuff to make people angry with us, but that doesn't change China's nature, right? And it doesn't change and like you always say, do you really think China is not going to turn around and do the same thing that they've done for the past 100 years to all these new countries, right? A lot of it just seems like silly to me. But that being said, I don't know what's going to happen, right? But if you ask me what it would take for Bitcoin to get there, I think those things would have to happen, and you have to have people in a flat panic that their dollars were becoming worthless and they needed to get into assets that could protect their purchasing power overnight.
Here's the other thing that a lot of us, myself included, have difficulty factoring into this Bitcoin to 1 million scenario very quickly.
Yeah, I mean,
okay,
there's no Bitcoin left. Sorry, yeah.
Oh no, you're right. But what? See, it's really easy, in my opinion, to think about, I'm going to buy this token, and when it moons, I'm going to collect my winnings, and then I'm going to go out and I'm going to spend those US dollars or those euros into the economy. Like I can quit my job, or I can buy a Lambo, or I can go on vacation or do something with that money. But what we're describing here is chaos at a level that we in modern times haven't experienced. And what I'm trying to say is that Bitcoin may go to 1 million in 50 days or whatever. And first of all, you'd have to sell some to benefit, but you'd be getting US dollars in return, which if you're understanding why Bitcoin went so high and what happened to the US dollar purchasing power, you're then trading your Bitcoin that's up here for your dollar that has purchasing power down here. And then what are you going to do with it? Are you going to go, is everyday life going to be the same? Is the chaos that causes Bitcoin to go to 1 million not going to have spilled over into everyday life and have paralyzed citizens of all nations and cause them to be like, I'm not going to, I mean, like, our supply chain's going to just run smoothly? Is milk going to make it to the grocery store so you can go at your convenience during normal business hours to casually buy food and other supplies, basic necessities that you need, much less discretionary spending items and impulse purchase items? I mean, I'll argue that there'll be a massive amount of impulse spending, but it won't be in the same way that we like. It'll be panic spending for things that people think the world is coming to an end. It won't be a fun time. I mean, your life as you know it goes out the door, and we're bombed back, we're quote unquote bombed back into, the last century where, imagine what it was like to live in Europe when the Nazis were rolling through. You think that was fun? I don't think that was fun at all.
No, and that's a very good point in the fact that, look, if you got $1 million Bitcoin in 50 days, you got other problems, right? Like it's not like, oh yeah, Bitcoin hit 1 million, I'm gonna go buy a Lambo. It's holy shit, I gotta spend $100,000 to buy groceries, right? Because the dollar has become worthless. And so the only other way that happens if all of the Bitcoin gets removed from the market somehow, right? If there is literally no Bitcoin to buy, and I don't know how that happens, right? And maybe you have big players and nation states all of a sudden decide at once, and maybe that's because we do have issues with the dollar, that Bitcoin is the best place to park your purchasing power and your sovereign wealth.
Remember, derivatives markets, futures, how do they function? Okay, typically when you want to, or futures markets, like for example, if I want to short Bitcoin, I go to the exchange, the futures exchange, and I say I'd like to put up some. First of all, I'm taking the unit that I would think, something that I own, I'm putting it up as collateral so I can trade these things. And what happens is, like, if I want to sell 100 Bitcoin short, I write a contract with the exchange. I put collateral to cover my butt in case I lose. But what happens is somebody loans the exchange, the derivatives exchange, Bitcoin, take that and they sell it in the spot market. So it's like the point is that I'm trying to talk like real life here, is that Bitcoin's price may go up and the overall supply that's owned may go down, or excuse me, may go up, meaning people may hoard it more. But I'm telling you, as long as there are derivatives markets and other markets that people can use to speculate against the price, there will be Bitcoin to trade. And that's what I'm trying to get at here, is that somebody is going to say, well, I've got 150,000 Bitcoin. I'm going to loan it to the exchange, and there's some supply there that can go into the market and people can trade it. And once you start to peel back the layers of the onion here, it helps you understand why stock markets get to be so stable, or it might seem stable in comparison to crypto markets, for example. It's because the supply doesn't always come from people dumping the asset. There are people that take positions where they borrow somebody else's Microsoft stock on loan, and they're paying a fee for that. I'm going to borrow 1 million shares of Microsoft from some other owner. You got to remember, why would they loan them out in the first place? And then somebody wants to short these and sell them into the market because they think the price is going to go lower. So you have to ask, why would the person loan them out in the first place? If they were going to go lower, then why wouldn't they just sell them flat out? Because they understand a few things about the world and markets, is that they have this asset. They can turn it into a productive asset by loaning it out. They can earn yield in that regard. They can get paid. Okay, they can earn a paycheck from loaning their stock out. Somebody else says, I'm willing to sell this short into the market. And what happens? It either goes down, they buy it back and return it, or it goes up and they have to buy it back and return it, and they either make or lose money. But the person that owned the shares and was making the loan doesn't lose their asset. They didn't sell their asset. They made money at the end of the day. And that is where, this is a powerful concept. And like a lot of these bigger institutional players don't participate in the markets like people like you and I. They don't just buy Bitcoin and hold it. They take all of their capital firepower, or most of it, and they put it to work in the derivatives sense, where they're borrowing somebody else's Bitcoin. So you think about this, like who on earth would loan their Bitcoin to somebody to be sold into the market? I mean, you're taking, there's different risk profiles across the spectrum here, but that's what I'm trying to say, is that there will be somebody, because there always is, somebody who's going to be willing to loan their Bitcoin to the market to be sold into the spot market, which is where you and I can go on Coinbase and just buy Bitcoin and hold it. And that has influenced the price of spot Bitcoin. All of the derivatives players in these markets do have an effect on the price. Just saying.
No, well, yeah, and you and I, us retail donkeys, don't look at it like that, right?
Right.
We're not big institutional players. I have no interest in loaning Bitcoin for 4%. Like, I just don't. The risk, in my opinion, is too high. But I'm not a big institutional player, right? So I manage it for myself. And we saw people try to do this with the Celsius programs and Voyager at a retail level, and they got caned. I mean, they just got absolutely destroyed. And so your point is very well taken, though. It helps to understand where there could be, potential supply in the market. Now, if you get into a situation where everything breaks, right, and these derivative markets break, that's a different story. But no, that's a great point. I just wanted to pull up, before we wrap up, this tweet from Tim Draper. He is 100% sure, not 99% sure, that Bitcoin will hit 250,000 by 2024. Hope he's right. These guys with these price predictions, I mean, it's the same as the guy who says Bitcoin's going to 3,000, right? Like, great. Like, that doesn't mean you should necessarily act on this stuff. Tim's a smart guy. I like Tim Draper, and I've watched interviews and YouTube stuff. He seems pretty reasonable, right? He was the individual who bought Bitcoin from the U.S. government that was seized from Silk Road. Is that correct? That's where he first.
I think that's right, but somebody needs to fact check that one, because I don't have any valid confirmation that that's true. Although it sounds right. I'll go on record to say it sounds right, but I don't know.
90% sure. And, if I'm wrong, I'm wrong. But I think that's where he got hit, which is irrelevant. It doesn't matter. Only to say that, he was aware of, Bitcoin's value and potential, at that time. So, that could be very valid. But all these crazy price predictions, they are what they are. They're just predictions, right? They're guesses. They're individuals using, their knowledge of the markets to try to predict where something can go. He owns a lot of it. Take it for what it's worth.
Yeah, I'll comment on what I think about that price prediction. I think that it's certainly possible, given how challenging, I won't call it impossible or even difficult. I would say it's a bit challenging for people to create. So, gosh, I don't know how to explain what I'm trying to think easily, but I'll do it.
Well, that would mean a left translated cycle, like we talked in the past. That would not line up with traditional, halvening cycles and the way this thing typically operates, right? Because you would expect for that to happen, maybe it would happen in 2025 after the halving.
Yeah, you're right. So, or I agree with that. The thing I'm trying to communicate is that I think that 6 months ago or a year ago, or excuse me, here we are a year later from where we were a year ago. I'm just arbitrarily picking 2 points in time. I think one of the fundamental aspects of Bitcoin is that it's verifiably scarce, mathematically scarce, provably scarce, all of these things. This is a concept that's really hard for people to grasp. I'm one of them. Early days for me. I didn't get it because I grew up in a world where companies could issue shares like on a dime at any hour of the day or night and completely rug pull their shareholders, quite frankly. And then all of remember all the ICOs that we went through this cycle where people were these coin offerings and blah, blah, blah. Same. And then, Dogecoin, how many more Dogecoins show up in the market every 24 hours? Okay. What, 100 million or something ridiculous? Like it's obscene. But those concepts are not really easily grasped because people are focused on like how much they can make. They don't care. And that's okay. What I'm trying to get at here is that for Bitcoin to go to 250,000, I think a substantial shift, like an even greater shift in mindset globally needs to occur, in that players that are able to take really large positions, like nation states, hedge funds, central bank style, like of the caliber, that have the kind of capital firepower that can move and acquire size, that pulls a statistically significant amount of spot Bitcoin off the exchanges, meaning it pulls it out of circulation. I mean, I don't know. I honestly don't know how it happens today. But the question that I really think that I want to ask when I think about that price prediction is what has to go, like how many things have to go wrong in the world to cause chaos and create havoc and cause everyday life to get disrupted and people to be scared and miserable and unhappier than they are now. What has to happen for it to go that high? Like that's my rhetorical question is like what has to happen?
I think things don't necessarily have to go wrong. You could just get let's just be optimistic here. Maybe you get, maybe you get regulatory clarity. Maybe you get, spot Bitcoin ETF. Maybe you get corporations where the accounting rules have changed and now it makes sense for them to hold Bitcoin on their balance sheet. I think a combination of those factors could push price up to that level.
That's right. That's the other aspect. I'm glass is half empty right now. I'm on the side of the spectrum where the glass is half empty. Now I'll flip over to the other side. So if Gensler, for example, gets forcibly removed or is forced to, at a minimum, walk back his ridiculous crap that they've been doing with Coinbase, the Wells Notice, with Kraken, and we see Congress pass or or Congress start to speak like more accurately and more truthfully about like they talk about the benefit, and they stop leveraging the things that people currently understand against what Bitcoin is and does. So what else? Let's
Nation state adoption. I mean,
yeah, like the El Salvador thing, like starts to like interesting. There's one nugget in the news right now, or in the crypto Twitter land, where the World Economic Forum is talking about how there's a startup that's helping reduce emissions by capturing energy from flaring. But what they're talking about is what Bitcoin, this idea of using Bitcoin to be the consumer, the buyer or the consumer of last resort for those methane flaring stations around the world. And honestly, I was shocked, zapped, like felt like a lightning bolt hit me in the forehead when I read that. I was like, I thought it was fake. But maybe, and maybe it is. I don't know. Who do you trust nowadays? Maybe.
No, I saw the same thing. And it was my first thought was, oh boy, what are they planning to do? Like, what kind of like hoodwink is this? But it's the truth. Like, that when I lived in Texas, I mean, I talked to a lot of people that were doing that, and it's if you've got oil fields, I mean, you already have found money, but like, why wouldn't you hook up these Bitcoin miners that capture the emissions, the flare emissions, and use that? I mean, there's no reason not to do it, right? And
I agree.
And so I think you're going to see a lot of that moving forward. And then that speaks to the truth is so much different than the mainstream media's narrative on this stuff. And you got to ask yourself, why is the mainstream media attacking this so fervently? Well, again, it's the same as the politicians. They've got donors too, right? Like they've got people that they answer to, and those people are in a traditional world, right? And so I think there's a lot of positive stuff happening, right? And has continued to happen despite all the narratives and and people rightly so are scared of crypto right now. They don't like the FTX stuff. 2022, you had a Lehman moment, you had a Bernie Madoff moment, and an Enron moment in the same year, and here we are trading a little under 30,000. And so, Bitcoin continues to operate. And the other thing that happens is Bitcoin mining. You look at what they're doing in El Salvador with they're using geothermal energy from a volcano. It's incentivized to go to the cheapest, most renewable sources of energy, right? And that doesn't work because they're doing it because the government tells it to. It works because a lot of these energy sources aren't really capturable by traditional methods, right? And so like you could use hydroelectricity to mine Bitcoin. You can use nuclear to mine Bitcoin. I mean, there's all kinds of different ways that Bitcoin is actually good for the environment over time, but it doesn't fit their traditional narrative, right? And because it doesn't fit the narrative, they're negative on it.
Yeah, and they have to be, and that's a really good point. I really appreciate you like steering the ship back in this direction for a moment, just because the incentives matter. So there's incentives for this to use these renewable sources that also have a benefit, like a parallel benefit of like in the flaring sense, you can say, oh, we're reducing methane emissions into the environment, and that ticks the box for somebody, and they're like, oh, okay, maybe this Bitcoin thing ain't so bad. You know what I mean? And but the pendulum is starting to swing the other way. And I think the politicians are smart, and they know that when sentiment is one way, they need to feed that back to their constituents. That's just real life. I don't.
Well, yeah. And the other thing too with this stuff is like the premise is in all these arguments, you have to look at the premise. And the problem I have with a lot of these traditional media, their premise is wrong. Right? Like they operate on the premise that using energy is a bad thing. Human beings should be striving to use as much energy as possible. That's how we get off this rock, right? Like there's no, for some reason, and I don't want to get into this whole climate change stuff because it's just, the premise behind it, I think is
losing battle.
Well, I think, and I think the premise is evil. I think what they say is humans bad, right? There should be less humans, because guess what you and I do every day, Ted? We breathe out CO2, which is apparently the worst thing in the world for, the environment, right? And so what are they really saying when they say that? They're saying that, people are bad, right? Like but like, look, again, I don't want to get into it, but you just got to always question, what's the premise behind what they're saying. And a lot of times the premise is wrong, but like you were saying, it's incentives do matter. And the incentive is for Bitcoin miners to find the cheapest, most renewable forms of energy, right?
Because they benefit. The mining operation benefits, and there's really good alignment there. I got this relatively inexpensive energy source that's renewable, and we found a consumer, like a buyer of last resort, so that in the flaring sense, this stuff's going to waste, and anyway.
That's a whole topic we can.
That's a whole other can of worms. We've talked. So I'll do my best to veer the ship back around to what we were talking about earlier. Is that on the economic calendar for the week, we've got some interesting data points coming along that people are probably maybe paying attention to think about, how likely is a recession? What's the Fed going to do? I think FOMC is the next big target, in my opinion.
That's where they're gonna raise rates or not raise rates.
Yep. So that determines, I don't want to say everything, but a little bit of everything. And what am I trying to say here? The debt ceiling. I think the volume on this gets turned up every single day as we move towards this moving target line, this moving line in the sand where something has to be done, meaning they finally do the thing that largely everyone's already agreed has to happen. But as you say, never let a good crisis go to waste. Everyone's jockeying for power and position in Washington all the time. So these narratives, these things, these topics, these crises scenarios are fodder for both sides to try and leverage, and they use them as leverage. And I get it. And you don't have to participate. I don't live there anymore, thank goodness. So point I'm trying to get to is that interesting economic data coming down the pipe, not super heavy, but I think it'll help us somewhat get a little bit of focus. So FOMC, debt ceiling. Well, the last thing is to try and keep, if you're paying attention, look at what's happening globally with liquidity, meaning PBOC. There's a good Twitter handle. What's his name? Mike Powell. Golly, yeah, the Mike Powell guy. It's for Pete's sake. Why does it? I do this where I want to talk about.
No, that's all right. We can.
Cross-border capital. That's what I couldn't remember. Mike Powell from Cross-Border Capital is a good one to pay attention to for the liquidity front. So yeah.
Great. No, I think that's a good spot to wrap it up, and pay attention this week. Hopefully the world doesn't fall apart. Try to watch everything you do. With everything you watch on YouTube, just remember that the algorithm is designed to push stuff that gets clicks, right? And sometimes what gets clicks is the world is ending. So that in mind,
again,
nothing we say is financial advice. Do your own research. If you participate in these markets and take the risk is all yours. So that being said,